All right, so we're live for another washing session today, and we're going to use a brand new simulator called Forex Tester 5. We've just been talking about it for a while and setting it up, and basically learning how to set up the situational example that we wanted to review today. So I didn't record that, not to bore anybody, but if anybody wants more information on this, just hit me up. If you want to learn more about the simulator itself and where you can get it and the differences between the free version or the paid version or anything, again, just DM me and we will review those if you're interested in using it. The setup that we've set up here today is a Swissy yen end of March, beginning of April of 2018. We have no hindsight. We try to make this as random as possible. And there are a couple of things to take into account before we start the simulation. The first one, which I mentioned during the setup portion of today's session, is that we don't have sentiment, right? Yes, you can add news to this simulator. It's pretty cool. But again, you're going to be missing a lot of the sentiment aspect of the day-to-day price action activity based on it, even if you have upcoming risk events marked on the calendar. Yep. Also, those risk events, if they're significant enough, could bring back memories of what actually happened during that time and create a hindsight situation that I would like to avoid. So we're not going to have those. And of course, trading without fundamentals or sentiment you're missing a big piece of the puzzle. So this is going to be 90% really technical. The advantage that we have is that during damage control, you're going to be focusing a little bit more on technicals than you are on the sentiment side of things. You're going to use the sentiment side of things for confluence, but you're not necessarily going to be basing any key ideas often enough for us to have to bother trying to find a way to simulate that, which is at the moment kind of impossible or very difficult, I think. So keep that, take that into account as well. Yeah, we're doing a single asset simulation again, which means that we have a brand new account so that we can see through balance and drawdown, right? What our situation is, yeah, at all times. And that way, we don't have to go through multiple assets and try to figure out where the drawdown is coming, having to sort account history or do any type of weird exporting. This is the cleanest way probably to execute this example. And the other caveat that we spoke about, and I'm sorry I'm repeating myself for those of you who are here, but that's for the recording. The other caveat is, of course, that I don't know yet how to set up a pre-existing condition, right? For example, I don't know how to set positions that were bought here and failed, right? So we have a starting damage control situation. I'll figure it out, yeah. But I don't have that as of yet because I just discovered this simulator today. So this is as fast as I can go at bringing something to you. And I'm excited because I think it's going to cut down on the time that we take, whether it's the bar by bar black box simulation style that we were doing on MT4, like the real caveman style, or the more sophisticated, fancy Excel spreadsheet that Daniel made for us yesterday. That was also kind of time consuming and painful, I think, for you guys. Mostly, like I said, I was engaged, right, at all times because I'm running these calculations. But for somebody who's watching, that might have been a very tedious way to run a simulation. Yep. So we can explain the same things here, but I don't have to. I'm doing half the effort that I was before, so I can focus more on the actual explanations of the trades themselves, rather than trying to reserve all my brain power for the calculations and making sure that nothing went wrong. I didn't put an extra zero somewhere or misplace a decimal spot or something like that. Okay. So those are the two conditions: no sentiment, and we have to create a bad trade in order to get into damage control. Yeah. So what we're going to do in order to create a bad trade is we're going to take some trades here on Swissy yen, with decent setups, as close as we can to a setup, right? We're not going to do anything crazy, like we're not going to buy up here as the start point of our trade, but because that would not simulate a real life situation. Maybe we'll buy down here after a multi-bar or multi-day H4 low. So that could be a perfect starting point. And this is pure a 100% coincidence. Yeah, that we are starting at a low point of a trend. Yeah. So we'll start like that, and if the trades work out, well, at least we're going to get some trade management practice going, right? But I'm hoping that they don't work out so that we can look at how to get out of bad trades. So what this is going to force us to do on these simulations until I figure out how to create pre-existing scenarios is we're going to have to actually do the trade planning portion of the trade, roughly fast, kind of a half-butted way, right? We're not going to go too nuts over it because the whole point, like I said, is to get caught. So we can practice washing, right? But this is going to be as close as we can get to a proper simulation. Yeah. So let's go. So I think the best thing to do is just take a buy. Yep. We're going to go with 0.10s just for the example purposes, or we can actually go for something more reasonable. On the H4, I probably wouldn't go full bullet on a 100K account, and would probably go 0.05 for example purposes, right? Although we got plenty. I mean, nothing that we do at 0.10s is ever going to give us a margin call. But to make it more realistic, I think 100K H4 trades with tight levels, 40, 50 pips aside, you're probably going to be doing 0.05s. If you're going to be doing 10 to 20 active assets at the same time, and I want to simulate that scenario, that type of portfolio, as closely as possible, because that's how I trade. Yeah. So let's look at starting, right? And now bar forward will give us our first H4 bar. Yeah. We're not going to do the full simulation. There's a full simulation where you can actually see the bar forming and stuff like that. But that's going to be great for scalping practice. I need to figure out a way to see how can I adjust the speed of testing, because even at the lowest setting, I found that it wouldn't give you time to really think, right? It's still faster than real time. And if you're scalping, you want that to be, probably as close to real time as possible. And then you can speed it up or close it down when you're waiting for levels, right? Which is fine as well. But it's super flexible, I think, and what it offers. And let's see if we like it as as part of the group, as a new tool that we can insert here. I thought about, being a way that this could be shared with everybody for free, like the full version, but that, it's technically not legal. And B, I think they've got a licensing system and everything, and I don't think that would be viable. But if we can make use of the free version, at least for replay options, because I can save these simulations and then send them to you, right, to illustrate certain things at certain points, then maybe we can take advantage of that. But again, that'll be testing that'll happen in the next few days. So the first thing we're going to do is we're going to place a market order. F2 is the shortcut for a market order. And then you just have sell and buy. Your size is going to be here. We're going to do 0.05. So I actually do have to change. Oh, maybe it doesn't allow me to do 0.05s. Yeah, it seems like it does. Let's see. You've got all sorts of risk calculators in here. You have all sorts of parameters that you can play around with and tweak. It's really complete. Yeah. You can place a stop loss, a take profit immediately, right? Whatever you want to do, you can just go ahead and do it. For example, you can say, I want a 100 pip take profit. You place 100 pips, you press this button, and that automatic 100 pip take profit goes there, right? This is in points. The simulator works in points, not in pips. So you've got to take a 0 or a decimal point off, right? A digit off to calculate the pips. So for example, if I'm measuring pips from here to up here, right, it says 621 points. That is 60 pips. Yep, I think. I'm pretty sure. Yep. If you want to calculate to the bottom, it says 1,000, right? 1,000 points, that's 100 pips. So you just have to remove a digit in order to calculate the pip value. And that is important when you're actually placing a position with a take profit, because you're going to have to put an accurate take profit. Once you place it, I think you can move it. The only thing that I didn't like is that I can't, for example, I'm going to buy here, right? Let's simulate along. And you can see here on the open position, Swissy yen buy 0.05 lots. That is correct. Open price, no stop loss, no take profit. market price that you were filled in. No swap and commission. We are not simulating those, but you can. Yeah, there's a parameter in which you can access and simulate swaps and commissions. And then you're already simulating the difference between the bid and ask anyway, which is great. And you already have that P&L showing in your open positions. Yeah. And in the account history, as you close those positions, you will start seeing the information there. The only thing that I don't like so far, for example, is that I cannot drag the take profit, right? So I have to add the take profit through order modification, right? Let's listen to this first.